Hey everyone, welcome back to the REI Marketing Secrets Podcast. Today on the show we have Jarod Alexander. And Jarod, for our audience out there who's just learning about yourself for the very first time, do you mind going into a little bit about your background and how you got started in real estate?
Yeah, Trevor, thanks for having me on the show here. And sure, yeah, I'll give you a little background of myself, and then that transition into real estate. So for me, originally from Fayetteville, North Carolina, and I tell you, one thing, and I didn't even realize this at the time, but when I was probably 10, 12, maybe 12 years old, I saw my grandpa retire and move out to Arizona, which is where I'm currently living now. And he lived off, come to find out, he lived off the rental income of this commercial property that he had. Right. So that's how he retired at age 50, mind you, too.
Mhm.
And so from a little kid, that always stuck with me. And anyways, but I grew up like, I think how a lot of us are taught is, you know, um, go to, get out of high school, go to college, and then, put your, work for 30, 40 years, put your money in a 401k, and hopefully you have enough to retire. Right. Well, for me, right out of high school, actually, so my grandpa actually owned a flooring company inside of that commercial property that he started, and my mom ended up taking it over. Anyways, long story short, I ended up working for her right out of high school and kind of going into that route in the flooring business. And so early on, I started out installing, but then I learned about sales and started, making some real money, right? And fast forward to about 10 years ago, I ended up moving out to Arizona. Now, mind you, that mindset throughout that process was just, all right, how can I make money? I probably wasn't as responsible as I should have been at that time, but just learning and watching people along the way. And then when I got out here to Arizona, I met a good buddy of mine, Randy Trevor, which we
Mhm.
both know. And we started, he started talking to me about his single family. I got introduced to that Rich Dad Poor Dad book, that purple book everyone talks about. And it just totally opened me up to a new way of thinking, totally changed my mindset about money, investing, my goals in life. And so I started, okay, how can I start creating passive money, passive income? So I got a sales job out here in Arizona. Again, started, having some money left over that I could invest. And I was like, what do I do with this? Right. And so my goal was to start out in single family. Well, I did start out in single family, but my goal was to buy about 50 to 60 houses to get to my number that I wanted to buy, or till I get to my number that I wanted to, have that my financial freedom number, right? And then I bought my first one, and I realized, everything was going great for about 3 weeks, and then I had a $4,500. I had a $4,500 repair bill, and that was a new sump pump. Some landscaping needed to be regrading because it was in Kansas City, Missouri. I never even saw this house, mind you. And and so when you're going into this stuff that there's going to be repairs and things that are needed, right? You factor that into the expenses, but essentially that just wiped my cash flow out for about 2 years, right? And I'm like, well, wait a minute, and I still try to get some single family, but this was when the market was at the height. It was in 2020. And so, anyways, fast forward, I'm like, if I want to scale, I need to start looking at something different, and looked at short-term rentals. I was trying to do the Burr method at the time, then went to short-term, so, looked into storage a little bit, and then fell upon multifamily, actually going by it to a new in-person meeting event. And for those, just getting started out on this journey, I highly recommend, check on Eventbrite or networking events in your area that you can go to and start learning about, this process and meeting people in this space. And there's a ton of people that are just so willing to help. And that's what happened for me. I thought I was wanting to be a full-blown syndicator at first, and I'm like, well, wait a minute, I need to get some exposure to this. So I started out as an LP, which is a limited partner, so pretty much an investor in the deal, and started out with a operator. I, if you don't mind me mentioning, Rise 48. they always talk about find somebody like and trust, right? And so, kind of going back a little bit, Trevor, and I'll pause after this to see if you have any questions. But I did about $25,000 down on that single family home, right? And now a year later, we ended up selling it and making some money, right? But my first investment I did was actually through a self-directed IRA. So for those that don't know, you can invest through your retirement accounts. But I did that first investment, which was 25,000, and I started getting a similar cash flow, and I was completely hands off, right? And I still got the advantage of was able to take advantage of the depreciation, all the benefits of real estate without having to do the work. And so that just opened me up to a whole new way of investing. Not a lot of people talk about apartment syndication. Not a lot of people know what that is, right? So fast forward, then I eventually I did 5 or 6 more deals as an LP. Loved this space so much, I started my company, Optimal Equity Group, which was formed to help educate others on how to achieve passive income through real estate. Primarily apartment syndications is what we focus on right now.
Yeah, it's perfect. And I really like where you mentioned initially your goal 50 to 60 houses. And I always thought about that myself going out and doing the single family route. But then I also think in my mind, like, let's say on a single family rental, I'm making, let's say it's cash flowing good and it's $400, $500 a month, and you're getting 4,800 to 6,000. Like you mentioned, one big expense, whether it could be a water heater, it could be a furnace, it could be a leak in the roof that you have to be repaired. We all know that fixing a house is not cheap. And I always thought that to myself. I'm like, one repair, like you mentioned, if it, let's say in the beginning it was cash flowing $200 a month to 2,400 a year, 2 years of cash flow is going to be wiped out on that one expense that you had mentioned. And I always thought that to myself, and I'd be like, it's almost like then I have to work without getting paid for 2 years while I have to still upkeep on this property, let alone any additional expenses have come through. And that's what really drew me to more of the passive investing route myself, is when I realized, okay, if I'm investing 25,000 in a single family rental, or if I'm investing 25,000 in an apartment syndication, maybe each of them spit off $200 each, but one's a lot less of a headache than the other one is going to be. And that's what I really like about your point there, and what drew you more to the passive investing side. I want to talk a little bit about what drew you to, say, the multifamily side of these syndications. Is there any other asset classes that you have looked at, let's say like your self-storage, your mobile home park, or are you more just working within the multifamily space?
Yeah, great question and great points too, because you hit it right on the head, Trevor. With single family, it was cash flowing $200 a month, and that's that wiped my cash flow out for those 2 years. So it's definitely important, and you factor that stuff in, but look at the numbers, make sure they make sense. But we're looking to scale. Multifamily was the route to go. Which, to answer your question, Trevor, that's what led me into this space. Is for one, I look at risk, right? This is hard earned money that I've worked for and saved up, for years, right? Is I want to make sure my money's going to a good investment that any investment that you make is going to have risk involved, right? But how do I mitigate that as much as possible? And so, what led me to the multifamily is, these are the apartments that we're investing in are workforce housing, right? These are contractors, blue collar folks that, is based on the employment around the area, so a lot of these are, in great locations by highways, a lot of job growth. I mean, some of these, employers are 5,000 plus employees, right? So you want to have good occupancy rate, and the area to support the job growth. Right. Those are, the key factors to look at when you're investing in markets: job growth, population growth, the medium household income, things like that. So, anyways, once I kind of learned and educated myself on that, multifamily and going back to compared to single family, right? If I got a 200 unit complex and I got 10 people that aren't paying the rent, well, I still got 190 people that are, right? In a single family, if I got one person not paying the rent, I'm getting 100% of zero each month. And so that right there was mitigating risk. And then And also, I mean, Trevor, it's probably like this in your area, but in Phoenix, here where I'm at, I mean, the medium, house average right now is like close to $500,000. I mean, it's like just under, right? Like 460, 470, to just get started, right? And not a lot of people, have the money for these down payments and things, so they need a place to rent. Right. And then we can talk about, so that was just one factor. And then you can talk about forced appreciation, right? Unlike a single family, it's not like it's not comped around the neighborhood. It's comped, based on the net operating income that this property is producing. So we go in there now and we, take over these are called value add apartments. So typically 1980, 1990s builds. We take over the units. We, increase or renovate or take over the property, renovate the units, add flooring, countertops, stainless steel appliances, and we are able to force that appreciation because whenever the new tenant comes in, we can charge a higher rent, and it's really just bringing it up to market. What I like about Rise 48 too is they don't try to maximize as much as they possibly can. For one, you got to be competitive, but for two, you want to provide a good living environment for these tenants and make it affordable, right? And so anyways, with all that, well, and let me just put some numbers to that forced appreciation real quick. If you have if you increase a unit on say a 200 unit property by $150 per unit, you increase that rent by $150 and say it's about a 5.5% cap rate, right? And you are able to increase that value by just over $6.4 million, right? By raising these units $150. Now that's not even including if you got paid parking, different amenities that you can charge for, there's other stuff to factor in there. That's just by raising the rent. So it's pretty remarkable on how much, you have a lot more control over increasing the value. So this goes back to make sure you're picking a good operator, because anybody can buy a good deal, but you want a good operator to be efficient in their business plan that's going to be able to crank out these renovations, in a timely fashion and make sure they're, and they got good property management that they can, fill that occupancy rate, so that is generating income. So those are some key factors that led me to multifamily, and just more of the mitigation, of my risk of my investment. And, I mean, it's real estate too, the growth, right? Opportunities there.
Yeah, I think that was excellent. And I want to touch a little bit on the vetting the sponsors aspect of it. I know you mentioned Rise 48. I know they're a very reputable company, and I've heard really good things about them. I know we're together in the deal through LFI and the tribe investing with Lone Star Capital. Similar, heard nothing but good things about them. When you're going out there and vetting these sponsors, is there anything specific that you're looking at? One, like, looking at their track record, looking at what they've accomplished, and then conversely, is there anything that you might have come across a sponsor where it might have been a red flag? Maybe they have had capital calls, maybe their numbers aren't underwritten conservatively, maybe they've had 100% loss on some sort of property. Just curious if there's anything that you're looking out for when you're vetting these sponsors, whether you're investing your own money, whether investing someone else's money into that sponsor. Again, whether the good things that you look for, or the not so good things that might spook you away from a specific sponsor.
Yeah, no, great question. And for me, when I just started getting started out, I mean, I had my buddy, kind of went to a couple networking events. I really didn't know much, right? So honestly, I went on to Google and typed in, what do I ask a sponsor before investing with them, right? Like I had no idea. And there was 20, 30 questions that popped out. Now, what I found, and this is what really, made me feel comfortable investing with Zach and Rise 48. Because when I jumped on a call with Zach, he actually answered probably 15 to 20 of those questions without me even having to ask, right? He just kind of, just went through the process. And then I started asking him, hey, have you ever had a deal that you planned, in your business plan that you were projecting it this outcome, and you ran into an issue or a problem? And if you did, how did you handle that? Right. And so, starting out, you don't know what you don't know. So you ask all these questions enough to it made me feel comfortable with them. Like he took the time to, and I wasn't no big investor at the time, and 25,000, right? He's got people writing him $1 million checks, but he took an hour of his time with me and just walked through that whole process. And the nice thing with me being in Phoenix, where he's right down the road here as well, is my wife and I actually, after 2 or 3 investments with him, went down, sat down with him at his office. He walked us through the whole thing, and it just spoke to his character, right? And so that was a big. I mean, that goes to that know, like, and trust factor, right, Trevor? You can. Again, anybody can get a good deal, but you want a good operator and you want somebody that's going to be a good steward of your money. And so, but some other key factors that I've learned after kind of being involved in this space is, like, there's a lot of operators, Trevor, that we know that, farm out their property management to third party companies, which is great. But I've learned throughout that is if they got a big portfolio and they got somebody else that's got a bigger portfolio with them, they're gonna spend more time with them compared to somebody else, right? And so what I like about Rise and Lone Star, which you had mentioned, is they have their property management. They're called vertically integrated, so their property management is in house. So that means, they have full control over that asset, and Rise 48 actually has the in-house property management, and they have their construction side as well, their construction team. So that means, like, they're pretty vanilla in their process. They have certain expectations for their employees. They got, I think, over 200 plus employees now. They have certain expectations for these property managers to, on their property management division side, to live up to, as far as filling occupancy, making sure there's low delinquency, vetting these tenants, right? Just things like that. And if not, unfortunately, they're like, hey, we got this certain expectation. If you don't meet this, then we'll find the next person that does, right? So, and then on the construction side, they have, they have like they buy wholesale. And so they just, again, it's very vanilla. It's very simple. They have a construction warehouse. They have the cabinets. They have the same flooring. They have the countertops, which they buy in bulk. They do the same thing for every unit. They got different finishes, like, they're platinum and they're kind of regular depending on the units and the property. But they do the same subway tile backsplash, lighting, right? They keep it simple, and they buy all these materials in bulk. And anybody that knows contracting, and, like, there's a big fluctuation in labor cost to material cost, right? And that can make or break a deal. I mean, that can, you raise the price of a unit per $3,000 to $5,000 that you weren't expecting. You times that by 200, that makes a big, significant impact on the cash flow and the income that property is producing. So those are some key factors that I look for now. And then you mentioned, like, if somebody does have capital calls, I typically, that's a red flag for me, because there's a lot of operators that haven't done that, and it's like, why would I do that? Why would I partner with them, knowing that there's other operators that have executed a business plan? Now, there are some, Trevor, that have paused distributions. Rise 48 is one of them, right? With these high interest rates, like. But again, speaking of the character, they got out in front of it. The communication was there. They actually did like a 2-hour webinar just explaining that process, what they were doing, why they were doing it, right? Which, as an investor, that makes sense to me. Hey, not everything's going to go perfect with an investment, but how are you doing to, make sure, again, you're being a good steward of my money and doing everything possible in your power to make sure I don't lose money. And if that's me not getting $150, $200 check per month, I'm okay with that, right? So those are some big things we look for. And then again, I invest my personal money, like with Rise. I've done 5 deals before I've offered them to my investors, because I want to make sure, hey, I want to get a peek behind the curtains. Same thing with Lone Star, right? I want to get a peek behind the curtains to make sure I'm, that they're doing what they say they're going to do. And, anybody can put on a good show up front, but what are we really doing behind the curtains, right?
Yeah, and I definitely agree with that. There's so many different sponsors I've talked to over the last couple of years where it sounds really good, and then either, like, you dig into their underwriting or you speak to previous investors, and it's just not that good. And it's very helpful. I know you're a part of LFI, and it's just been very phenomenal using that group to vet and see different sponsors. But like you mentioned, even though Rise 48, they paused distributions on potentially some of their deals, at least they got ahead of it. They communicated it. And that's like really what I'm looking for in a sponsor as well. Cause I mean, no one really could have predicted like how high interest rates would have gone in such a short period of time, as that seems to be the common cause among the multifamily sponsors. But if I have a sponsor and yeah, maybe they did one capital call, but you see some of these sponsors and they have like, I'm saying like Rise 48, but say another multifamily syndicator, they have like 10 different deals and every single one of them needs a capital call. Well, that's a little bit that's a little bit concerning because the underwriting was poor on every single one of these scenarios. So I do really like where you mentioned about that, and even though Rise again paused distributions, but sometimes it does make sense in the given point in time. But as long like for me as a passive investor, I just want someone to make sure that they communicate that to me. They communicate their plan because, like you mentioned, it's almost like a marriage where if I'm giving my money to this syndicator, it could be, especially now, maybe 5 to 7 year hold, and sometimes even longer, depending on how the market cycle is and depending on how it turns out. So I have to really trust that individual. Where like it's not like selling a stock where I buy Amazon stock and I could sell it tomorrow and get my money back whether I made a little bit or lost a little bit. It's pretty much very illiquid, so you just have to make sure when you're investing with the sponsor, you have that level of comfortableness that they're going to take your money and be a good steward of it. But Jared, I
Well,
want to talk a
and
little bit. Yeah, go ahead.
if I may, real quick, just to add on to that, Trevor, is one another red flag for me is if I talk to an operator that just doesn't want to feel like is like rushing me off the phone
Hmm.
or just doesn't want to get me the time of day. Like that's a huge
Yep.
red flag for me. So anybody that's new getting into this and you're just kind of, vetting different operators and stuff, like if they're rushing me off the phone and they're just acting like they're too busy for me, well, what are they going to do after I invest $50,000 with them, right? So that's a big red flag for me. Going back to that character, right, Trevor? I mean, just these people that are gonna. I want people to be a good steward of my money, right? And like you said, this is like a marriage, right? You're tied to these operators for 3 to 5 years or until these deals sell. Could be longer. So yeah.
Yeah, and you made a good point there, and I'm just thinking through something quick for our audiences. There's like a sponsor who I talked to probably about a month ago, and I really like their offer, and I really like what they had going on. But their investor relations person called me like, the call was like 11 a.m. and they called me like 11:10 a.m. 10 minutes late to the call, and the call was only scheduled for 15 minutes. Didn't extend the call, so we only had 5 minutes, and it was almost like, here's our company, here's what we do. If you want to invest with us, let me know. And I was like, didn't even go to like into my background, like when I'm looking to invest, have I invested before? So like you mentioned, where again, if I haven't even invested with them before and they're gonna act like that before I give them my money, it's not gonna make me feel comfortable. But talking about that, curious how your company Optimal Equity works and really what you're able to do out there for folks that are looking to invest in real estate and what you're able to help them out with.
Yeah, absolutely, Trevor. Thanks for the question there. And so what we do is kind of unique. Is so again, I like I mentioned before, I created Optimal Equity Group because I've once I find something that I like and that I'm like, wow, everybody should know about this. Like I'm the sales guy to shout it from the roof type of guy,
Mhm.
right? Like, I just wanted to, help everybody at least know about these opportunities here, right? Because most people just they know about 401k, self-directed IRAs, put your money in the stock market, mutual funds, bonds, things like that. Hopefully it grows, right? And once I learned about this and how you can really, I mean, you start looking at this compound effect of the generational wealth that can be created with this. I mean, it's pretty exciting to me and mind blowing in ways. And so, anyways, I started, my company to help educate others, right, on how they can get involved in these types of investments and participate. And so, for me, I'm not an operator, so I'm able to vet the operators, and it's kind of nice because I'm looking for experienced operators that are buying with a track record, that are buying properties in emerging markets. So like Rise 48 has been in Phoenix, Dallas, and now moving into Charlotte, North Carolina, which I'm excited about because that's where I'm originally from, or not Charlotte, but North Carolina, and I go to Charlotte every year. But and then like Lone Star, that deal we did, Trevor, was in Dallas, right? So we are partnering with operators that all right, for one, emerging markets, two, that have a track record, and 3 that are going to be kind of what we were just talking about, a good steward of my money, right? I mean, and what's cool is some of these operators have fixed rate debt, like Rise 48 has the bridge debt, and you know both of their arguments for what they're doing are awesome. So it creates some diversification there. Rise 48 learned a lot with the high interest rates and how that climbed. Nobody saw that coming. I mean, they have these programs like CoStar and some of these other very expensive software programs that are just spit out tons of data and economics against certain markets and stuff. And again, nobody saw that coming, but they learned from their mistake there, right? And so they've adjusted their model, adjusted their underwriting, and then I look for the communication. So, anyways, all the things we just talked about in vetting an operator, that's what I do. And then I invest my own money, right, to make sure, okay, hey, they're doing what they say they're going to do. And then that's when I offer that to investors to, participate in the deals. And like, a lot of these deals we're negotiating a bigger check amount. So I might partner with some other guys doing what I'm doing and say, hey, let's partner together, and we could bring, instead of $500,000 to $1 million, let's bring $3 to $4 million. And then we can negotiate, get better terms for the investors. And, with, and some of it's all different deal by deal, but, more than likely you're going to get better returns by investing with me, with no cap on the upside either. Right. And so, yeah, those are just a few things that stand out. But yeah, primarily I want to help, because it's really determined, and it's fun, Trevor, because I get to sit down and talk with people. What's your why? What are your goals? Right.
Mhm.
I get to explain my why, which is I want to create time freedom to spend with my family and the people that matter most in my life. Right. That's very important to me. At the same time, I'm going to work and I'm building a business that I can be remote. I'm the type, I can't even sit still on the couch to watch Netflix on the weekend. So I'm the type that's always going to be doing something.
Mhm.
But to just have that time freedom and that flexibility with the passive income coming in on the back end and helping others create that same passive income as well is my mission. So.
Yeah, that's absolutely phenomenal. And I wanted to ask you if you could go back to, say, early on in your investing career, what's the best piece of advice that you would give to someone who's back in your shoes, who's just getting started investing in real estate? What piece of advice would you give them?
Well, the first one is don't wait. Get started, right? Because I spent 2 years just kind of doing that, I call it analysis paralysis stage. And once I finally pulled the trigger, that just got me over that threshold. And I'm like, why didn't I do this earlier? So that's the first one. But I'll give a two-part answer to that. And the second one is find somebody that's doing what you're doing, that has had some success, and then just follow what they do. Get in front of them as much as possible, right? You are the 5 people that you hang around. So get with some people that are successful doing what you want to do. And now I'm sure Trevor's talked about it on this podcast before. There's tons of different asset classes. Like I focus on multifamily, but there's storage, there's debt investing. I mean, there's just so much once you start getting into this space. So just determine, first off, determine your goals. I think it's really important to have that on paper. What are you looking to achieve? What's your why? Right. And then, almost start with the end in mind. Find out how you can do that. What's the number you need to hit? And again, find someone that's doing that and follow what they do. So.
Yeah, that's awesome advice. And Jared, last question of the day is, if our audience wants to learn more about you or Optimal Equity Group, where should they go to?
Yeah, so I'm on LinkedIn, just Jarod Alexander, or you can go to my website, www.optimalequitygroup.com. And actually, if you go on there, I got a free ebook really explaining a condensed version of everything we talked about, how to, my experience going through this, how to get started, and the next steps there. So you can just, again, optimalequitygroup.com. You can put some information in, and we'll send you a free ebook there. So.
Awesome. I'll make sure to include that in the show notes of today's episode. And Jared, thanks so much for coming on to the show today.
Hey, thanks for having me, Trevor. Enjoyed it.